Showcase, wasn't it? Well, we can do better with those applause if you feel like it. It also gave us a glimpse on how Aurionpro is set to be the next leading global tech provider. Ladies and gentlemen, now to set the context for the evening, I'd like to welcome on stage Mr. Ashish Rai, Vice Chairman, Aurionpro Solutions Limited. Ashish is a fintech industry veteran, bringing with him an extensive 22+ years of track record of building enterprise software businesses for global markets, and he guides the overall business at Aurionpro. So ladies and gentlemen, put your hands together and welcome him on stage. Very warm welcome to you.
Dive deeper into what we do as a business, and then we'll obviously spend as much time as we need to in terms of reading down on Q&A and stuff. So this is, remember episode from before the pandemic days, when out in the US, I visited one of these tech events where, used to be fairly hot, probably still is, pandemic kind of put a lot on those events. And I was talking to a speaker where, my question was very simple. I said, okay, Ted, I think the first T stands for technology, and then there's hardly any tech speaker. There's people talking about life and diet and things like that, and there's no tech speaker. And why is that? And he said, there's three problems with tech speakers. One is they tend to be really boring. They don't know how to talk. Second, they tend to use a lot of jargon. What was the latest thing going around? We were generating AI, sort of cross-chain crypto, composable banking, things like that, which no one really wants to hear about. And the third thing is they just don't know when to stop. So problem number one, I can't do anything about. So you stuck with me for the next 30 minutes or so. So boring is what you get. Problem number two, we will do something about. My goal is to really try and boil the essence of what we are trying to do with the strategy in very, very simple English, at least when we set the context for what is it that we're trying to do. And then we will try and stick to the time as far as the prepared section of this plan is concerned. Right, so we will, a little bit about me, and I can see a lot of people who met me before over the last few months that we were talking. So I joined Aurionpro as an investor in 2020. I joined Aurionpro as an executive last year, coming up to almost 11 months now. And it's been a fairly rewarding journey for me personally. Overall, I'll share some of that as we go. Aurionpro has been around since 1997. We truly stand on the shoulder of giants, as they say. We IPO'd in 2005. When we IPO'd, we were a revenue of about 10 crores, 10.5 crores, thereabouts. We finished last year at 660, which is a CAGR of something like 26%. While we were in that journey, we also divested a number of our businesses. So some of those to the right, we sold the IDM business to KPMG, cybersecurity to a fairly reputed vendor called ForcePoint in the US. We demerged a company called Treshara from us. So if you look at all of that together, we probably CAGR 35%, something like that, over a bit of time. So it's grown over time. It has its phases. We've always done acquisitions to build out the product portfolio, which we've done from time to time, and then we were expanding around the services business till some time before we started simplifying the business overall. Right. So we started our. I joined as an investor, as I said, in 2020, and we sat together and we said, okay, we need to really refocus the business in terms of where it needs to go, and we started our strategic pivot in 2020, some of which we'll share as we go from here. Where are we today? Just to give you some key sort of information points. We are a products and platforms player that operates globally. We are present in 14 countries. We have now over 2,100 people overall, and that's actually gone on a fairly fast clip over the last 9 months, where we went from something like 1,400 people to almost 2,100 now. And there's a lot more very, very high quality talent that has come in and joined us from the industry. You saw some of those product shops across the world pretty much come in and join us in the journey to try and build their global products and platforms player out of India. We work very deeply with a select set of clients that is almost 100 mostly financial institutions across the world and a few transit organizations, right? I will not spend a lot of time on awards and all, I will come back to it when we are talking through the products. Right, so what is it that we started doing, right? And to just really bring it down to the essence of what we're trying to do, the core thesis had just a few points, right? One, we were doing a lot of services business and we said we can't really sustain the margins for the services business. That will come down over. When we were looking at it that time back, obviously the structural cost in the services business was changing. That would depress the margins. We could already see, go on to GitHub and see the shared libraries, all this stuff, and you could see the productivity of an average programmer is coming down. Now with, obviously, I don't know, those of you who still enjoy coding, you go to GitHub and you see Copilot and you say, okay, that is just, I don't need a programmer anymore, right? And almost any of us can do it. So the productivity of, a lot of the labor arbitrage that we were writing over, that more or less seemed to be gone. If your average programmer can become 5 or 6 times more productive than what it is, right? So one is we said we don't want to be in the services game anymore. That's not for us. Center the business around IT. So even when we do some services, center it around IT so that we can actually drive better margins from it. Then the second thing is, if we are in an IT business, we don't want to be a single product IT business. We don't want to be a one-trick pony because that exposes us, our shareholders, to too much lumpiness in revenue streams. We said, okay, if we build IT, we want to have a portfolio of IT as we go. Third, if I want a portfolio of IP, we don't want to be restricted to one sector when we go about building that IP, because again, I expose myself to the cyclicality of that sector, even if it's sector as large as banking is. So we said, okay, where else can I go? Even if I use the same payment stack that I use in banking, in transit, at least the demand is not correlated, right? So we say, okay, can I go to adjacent sectors which at least have an uncorrelated demand and build out our IP portfolio there as well, right? And the fourth very simple insight was look at the value chain, look at how does the customer buy. So we are not trying to sit in a box which says we are software or we are hardware or we are services. We are saying, how does the customer really buy? Can I go and occupy every point on the value chain? And that is what helps me drive margins, right? So if a customer is a bank and they buy software with cloud, we'll do software and service in cloud. If the customer is a transit organization that buys hardware to software to gates, we will do the whole chain. How can I actually occupy every point on the value chain? How can we actually become the most cost-efficient producer at every single one of those points, right? So I think that was sort of a key insight that we were driving with, which is how do I really integrate across the chain rather than say, I'm a software company, I'm a hardware company, I'm a services company, I'm an operations company, or something like that, right? If I sell to transit, I sell to transit, I will sell what the customer wants. So that was sort of the, we'll come back to it, the core sort of thesis that we were working with when we started this pivot back in 2020. We want to build a business centered around IP that goes across sectors, ideally, and that allows us to really light as many points in the value chain as we can. And as I go into describing our offering, I'll spend a little bit more time trying to explain that. So, if we choose to build IP, how do I really choose the segments to come in? And that boils down to very, very simple things. Which segments do I want to be in? One, the segment has to have a long demand runway. That's quite obvious. If you're building a business out for the next 15, 20 years, we should be able to see that demand environment lasting. Products is a very different business from services, right? I think the important thing to understand here is, and the reason I make that point is bulk of Indian IT, as all of us know, is services, so I think people understand that business better. Services is a very linear game. I sell 1,000 people, I make 1,000 people of revenue. I sell 10,000, I make 10,000. It doesn't matter what those people are doing as much. Product is a very different game. I need to put a lot of capital upfront to build the product. I don't know what my success rate is going to be, even if I have a very high quality team. When I succeed, I don't know what the scale of that success is going to be. So I need to be very, very careful when I get into building that product, right? So I need to be very sure about the demand runway when I go and build out that product. The second is, it has to be a segment which has fragmented sort of players, at least the leadership is contested. So it should not be I get into the payment networks where there's a Visa and a MasterCard and there's no room for a third one. I want to be in a place where at least I have the ability to contest for a global leadership. The third is it has to be an area where I can build out a tier 1 asset. Right? So because if I'm building a product, the idea is to go out and create a leading product in the world. So we should have the ingredients and the ability to go and build out those products. So as long as we meet those 3 criteria, we are in that segment. What are those segments we are in right now? Corporate banking is one, transit is another, payments is the third one, and we look at that, right? But essentially, just how do you actually choose that segment? And the second, then very simple aspect of driving leverage to give margins. I made this point before, some of you noted, we are actually a very profitable shop, and there is a reason we can drive those margins, right? So first is, at the core is the IP, the product that you build out. That itself allows you to drive that itself is a very high margin play, and that allows us to drive it, right? So that's one. Second is, surround that product with a set of platform services that allows us to go after a bigger market, allows us to drive a higher margin on it, right? So that is essentially things like cloud services, etc. that we do around that IP. And the third then is, which is really a 5 to 10 year play, bet on the convergence of these platforms coming in, work with other partners to drive the leverage on an ecosystem. This is our platforms like Auropay. On the payment side, these are platforms like Aurobees, which is a SME SaaS platform. These are platforms like Ravi, which is a healthcare SaaS platform in the US, right? So essentially, from an immediate revenue standpoint, that third lever is actually not very relevant because this is a very, very long-term play, betting on the convergence of platforms coming together, right? But that is how you actually drive margin in the space. I essentially have 3 levels of leverage on the same piece of IP, right? And that's how you both increase the market size as well as you increase the thing. So that's essentially what we are trying to do in very, very simple English. To the extent that I explained, we say go after focus segments, build IP in those segments, and then drive those 3 levels of leverage on that IP that you build out. Right? So what are we trying to get to, right? So we're building out a global products and platforms leader. We started out in 2020. The goal in 2020 was to, one, simplify the business. We were in too many places. This is where we divested out the cybersecurity business in the US in 2020. We closed down a few lines. We actually shrunk the business, as many of you would have seen. And we said anything which is non-core, we stop doing, or most of what is non-core we stop doing. It doesn't mean we certainly stop our contracts and walk away, but to the extent that we can divest a business, we did. To the extent that we can close it down, we did. We simplified the organization, shrunk the business, and we said, let's focus on building the products out, which is what we've been doing for the last 2 years. So most of our core product build got done over the last 2 years, and that is essentially the 20 to 22 phase. And then that is what brought us to this year, where we say, now let's go out and see what we need to do to expand the sales for these products, which is where we have a more or less brand new sales organization that came in over the last 12 months, really bulked up in the US, bulked up in India, bulked up in Southeast Asia and Middle East. This is usually a team that came in with a lot of experience from other MNC product shops, and we worked on fine-tuning the product for the specific markets that we were going after, right? So once your core build is done, now we fine-tune and we go there. So that is the second thing. A lot of investment in the organization, which has been going on now, and that's why you see our headcount go up from 1,400 to almost 2,100 people over the last 3 quarters, essentially. And that is essentially us bulking up the organization to get it ready for the global scale. Both the sales organization as well as the R&D organization and the delivery teams, right? So there's been sort of scale in every aspect. Get the structure more streamlined for scale under the leadership of Shekhar for the banking, fintech side, and the leadership of Sanjay for the transit side. We obviously, both of them in the businesses, we've actually built up a very strong layer of leadership under to grow the business overall, right? So that's essentially what we are at right now. That's essentially what we will do for the next couple of years. go out into new markets. So our core base has always been Asia. Our core R&D has been in Asia. Our core client base has been in Asia. We will go in and try and get as much share as we can in what is our home, whether it's on the banking side, whether it's on the transit side, and then we will expand the channel out into US, which we've done, and we'll start picking up share. Right? US right now is 7-8% of the firm's revenue. That number will go up over the next few years as we expand, and then expand into Europe as well as we go. Right? So go after the market. Asia will continue to be our home for quite some time, but slowly that scale will come in as we fine tune the products and expand out. Right? The final goal as we get into 2030 is very, very simple. We've already chosen the segments. We've already built out the IP. We will build out the absolute tier one, best-in-class IP that can be built out. We will benchmark against the global leaders, whether it's FIS, whether it's Finastra, whether it's Pfizer, whether it's Wix, whether it's Analyst. We will make sure we have the talent and the capital to really build the products to that level, and then we will, in each of those segments, get to the top 3 position in the spaces that we chose, right? So in the markets we are in, which will usually be the global markets. So that is essentially what we are trying to do, and that is where we expect to get to by 2030, right? So that's the game. We've made a lot of progress over the last 2 years. I was talking to some of you, before the event really started, and I can see there's some excitement around it. I would say we've just about started on the journey. I think we've done some core work that needed to be done, but this is a fairly long play. It's not going to happen tomorrow. It's not going to happen in 2 years. To get to a top 3 position in any large market takes time, takes stamina, and we have the determination to get there, but that's not going to happen over 3 months, right? So that will take its time. That hopefully, without using any technical jargon so far, explains what we are trying to do. Coming on to the products, they're essentially, so there's a lot of products, and I've heard that observation before as well, and feel free to make it when we get into Q&A as well, that we have a lot of products. But the idea is this: I think it's important to turn that around, come back to that point about value chain that I was making, and come back to what is the bet that you are making. We have 4 large bets essentially that we are making. Bet number 1 is transformation in the corporate banking space. We believe, Shekhar and his team, Shekhar will spend some time with you later on, and you can ask him as well, have a lot of deep experience in the space. We believe the time has come for a lot of investment to go into the corporate transformation space. We have a set of products we believe are really, really strong in that space. Corporate loan origination, for example, we have pretty much the leading product in core Asia. We work with the 2 out of the top 3 banks in Singapore, some of the largest banks in Malaysia, some of the largest banks in Thailand, some of the largest banks in Vietnam, some large banks in India. What tells me that the IP is tier 1? So Chartis, there is this analyst, which is probably the most respected analyst in the risk technology space. Shekhar and team, spent a lot of effort participating in that risk tech quadrant maybe 6 or 7 months back. And this is the first time we participated, and we are squarely in the leaders quadrant. The only player from Asia, the only player from India, which is squarely in the leaders quadrant on every product that we participated with. Corporate loan origination, collateral management, limits management, each of those 3 quadrants, right? So that kind of tells you, benchmarked against global players, we are squarely a leader in terms of what the product can do, how deep it is. And the reason for that, again, we'll spend some time on it, but we have really spent a lot of time building out a tier 1 product there. Same thing with transaction banking. We've launched a brand new product about 3 months back in the digital banking space called Aurionpro, which again, we think the time is right for. So there's a lot of investments banks have done on India's side. There's not been that much on the corporate side in terms of bringing the experience together. We believe the time is right for the banks to move that way. Right? So that's bet number 1. Especially as as the world goes into a high interest rate environment. Right? So there's a lot of talk. There's a lot of talk around the Western world going into recession, banking sort of slowing down the spend, which is probably true if you're an investment bank, you need the M&A fees and stuff like that. But a high interest rate environment is not necessarily bad for a tier 1 bank sending out corporate loans. That is where you are making your money. And we actually see the spend going up when it comes to digital transformation in that space, right? So I think we believe this is a long sort of multi-year spend that will help us, right? The second major bet is what I call smartification of mobility. Essentially, transit is a very large space, and in that space, so there are two sort of divisions, right? There's the Western world, which has a lot of legacy tech. There is the emerging world, which has no tech, or moving from no tech to some tech, right? And both of those are moving towards what you call open loop payments. The latest in the space, so you used to have a prepaid instrument, you take it out at the metro gate, and it deducts money from the prepaid and goes in. Now you want to take your credit card out, or you take your Apple phone out and pay. You want to do account-based ticketing, you want to do QR-based tickets. So the world is moving there. We believe this is a movement that cannot be stopped. We believe this is a decade-long movement, probably. The Western world moving from the legacy tech to the open loop tech. The emerging world moving from no tech to the open loop tech. As you've seen, India is pretty much leading the way on those things. And that itself poses a huge opportunity. What are we doing in the space? We are creating what we believe is the most integrated end-to-end offering in the space. So we're not sitting in a box which says I do AFC software or I do validators or we do gates. We've done acquisitions, backward integrated into the chain completely. We can play on pretty much every part of the chain. Sanjay and his team have built up, in my head at least, sort of almost an unmatched R&D capability to engineer things in the chain. And I should have made that point maybe when I walked in, but if you really want to have a good experience out here, or engineers have done a lot of work putting out some things out there, at the back of this room, you can see a validator unit there, you can see, of course you could not bring everything in here, if you want to spend more time, come to our experience center, either in Mumbai, Singapore, wherever, and we'll put on a better show, but have a look at that. The amount of R&D it takes, and this is core hard R&D. This is not sitting on a computer and writing a piece of software or copying a library from GitHub. This is actual hard R&D, and I think Sanjay and team have built up really a best-in-class R&D setup to do that. Last week in Barcelona, I think we announced a EMV card reader, which has taken probably a couple of years for us to perfect and get certified and all that stuff, but that's sort of the corporate talk in Barcelona when Sanjay and team launched it. Right, so a lot of work gone into that. That's called ECR1 and sort of. So I wanted to call it products, but I just put one thing out there as it's sort of from last week and better to stand out that way. Sanjay can spend a lot more time explaining to you what the products are. So just like on the lending side, what tells me we have the absolute tier 1 asset in the space? State of California, 300 transit operators. They wanted to move from closed loop to open loop, and they went on a global RFP. We selected 3 vendors to do it, and we are one of those 3 vendors already rolling out in 5 or 6 cities. So again, global competitive RFP, no choosing favorites, and probably I'll ask them to explain that a little bit maybe as we go, or catch him for a break after this. It's not an easy thing. There's no fixing that game. This is global, competitive, every big player in the world competing, and we still go out and be a small, transit player of Singapore. So that kind of tells you when it comes to tech, we can go head to head and win pretty much anywhere in the world. This is probably the most as competitive as any RFP gets. Right. So again, the same story. The third major bet is on what almost everyone in this room is sort of very aware of. What we believe is a multi-decade sort of digitization of India and riding on the growth of what happens in India, right? So this is where, one, we play in India with all our global platforms, whether it's on the banking side or the transit side, and we built up some very special capabilities which are very, very unique to India. So for example, your data center and hybrid cloud. I think we have probably Master engineer in the room here. You can ask them after this short talk gets over. We built up probably one of the highest quality teams when it comes to that. And then the idea is, it takes a lot of skill to get into data center design. It's not that easy a field, so it takes time to build up the offering and the capability, and we've got one of the best setups, and we've got the wins to sort of prove that. We also do a lot of work jointly with the government on some of the flagship programs that we can't really talk about, but we have a very strong collaborative relationship on a number of common projects as well, right? So that's essentially, obviously we build all our global platforms in India. This is our home market. We're not a services shop that says, okay, I get low rates here, so I won't be here. We really want to ride the multi-decade that is happening in this country. We want to ride the digitalization that's happening in the country, and we want to contribute meaningfully to what is going on in terms of actual real hard capabilities that the country needs. That's number 3. And the 4th big bet, which we are playing, is essentially what we call co-engineering, co-building IP. Now, there's something very unique about Aurionpro that almost doesn't really get seen that much in the market. We are a product shop ourselves. We know what it takes to really build a product, how hard it is, how to go about doing it. We know what it takes to stand up an implementation team for a project or a product. We know what it takes to surround the product with a API framework, make it cloud native. Everything that goes around doing the product. It's not so easy for the commoditized services folks to get that. And because we are so good at it, second, because we have a whole portfolio of pre-built IP, we partner with several leading technology firms in the world. Some of them we've announced, and now we've sort of instituted a policy not to announce the names there because of competitive reasons. But there's a couple that we've announced before, so I can talk about it. Astra, for example, again, big technology firm in the world, a very large digital banking player in the US. The idea is, so when you look at a typical what you call IT company in India, and you go to their website and you look at the link which says partners, and you see a list of players, Red Hat and Microsoft, whatever else, it essentially says, I am a player, I'm consuming technology from the Microsoft or the Red Hat or whatever to implement what we're doing. When we talk these partnerships, this is these partners consuming our technology. So it's being a technology provider to technology providers. This is a game that cannot be fudged. I can still make a product and sell to a random bank, but if I sell to the number 1 trade finance technology provider in the world, I sell to the number 1 capital markets technology provider in the world, the IP really needs to be tier 1. The IP really needs to be very, very good, otherwise it doesn't. I mean, you're talking to a highly mature partner who is capable of evaluating, right? So, but we are getting very, very good at that game. Also with the transit business, for example, again, partnership with MasterCard, etc. Right? So, you're talking to buyers who are really in a different orbit when it comes to evaluating technology, but we are very, very good at it. We believe this is something very new for us. There's this Sanjay Verma in the student somewhere. I think we're going to again catch him after this. He came in from FIS to try and help us build out this a little bit more. Our core engineering teams have been building out part of this anyway, so I think you can spend a lot more time, but we believe this can be very, very large as we build this business out and sort of collaborate with the partners instead of, and then we will compete where we need to, but also collaborate where we can, right, with the global players. So those are essentially the 4 large bets that we are making. Each of these, we believe, is a very, very large target market. There's one part, I don't know how many of you noticed, I actually ignored a TAM number which was there on one of the previous slides, so I'll go back to it now and talk about it because it did not make sense to talk about it before I covered this slide. If I can figure out how to go back. Yes. So when it comes to products, we believe the target market is fairly large for the products that we're focusing on. That $11 billion number, I think it's a number we calculated. You can challenge it. Why you will challenge it is very, very simple. One of the reports I was reading before this was, for example, transit. Transit Somebody is saying just the transformation that needs to happen on transit payments is a $30 billion opportunity globally, or thereabouts. If you say digital banking, some would say it's a several billion. So we say, why do I use a much smaller TAM number? We sort of qualified that down. It's not a simple sum total of total market size of each of the products we make, but it's sort of a qualified judgment on which markets do I want to compete in. For example, we don't want to be in LATAM for any business other than transit. Which segment of the market you want to compete in, which countries you want to compete in, right? So we believe it's still a $11 billion annual spend that we can go after with the product that we built out. Similarly, when you add the layer of services we're after, that's a $27 billion spend that we can go after. Again, you can challenge it. I mean, I was reading this last week, someone was saying just the amount of repurposing you need to do to traditional data centers to make them repurpose them for generative AI is a $1 trillion opportunity, and that probably is, right? But we don't play that game. So it's sort of, you say, okay, you guys do data center design and build, then why is that not the size of the market? It is not size of the market, it's sort of we qualified for what the game we want to play, right? So, but it's still a very large segment, and I would really hesitate to qualify for the convergence platforms because then you're just covering the entire world, right? But I think if you basically one message you want to take away from that whole thing, when we look at these 4 strategic bets, each of these is a very, very large target market, and if you're playing for the global field, you will get access to a large part of that market as we go. So that's essentially it. Maybe quickly, since this is an investor meeting, and I suppose people are interested a little bit in the numbers and what is going on, I'll cover this out briefly. So we, like I covered on the first slide, we've been growing, our CAGR is 26% even after, a lot of investments and all that stuff overall in our history. We intend to keep that CAGR. So whenever we share our plans, we say we want to grow 25 to 30%. That's what, it's not a number we got our hat, it's a number we believe is the right number for us to keep growing at. Last year, we obviously overshot that number, and the revenue grew by 31%, and PAT grew at 35%. But that's, I would say, long term, that's still a 25 to 30% trend. Debt to equity is fairly down, as all of you know. Last 3 years we worked on paring down the debt level in the business. It's at a level where it will keep going up and down a little bit, but we are very comfortable with the level we are at 0.14. We've got enough ability to add on leverage to the business if we ever needed capital for any opportunity. We hold each of our businesses to a bar of delivering. If you use capital, you deliver to us at least 25% return on that capital. So that ROC bar, it will probably keep going up a little bit as we go, but there is a very, very hard bar we have, and I think we by and large have been delivering to it. And now, talking back from that pivot, we've delivered. You can see those lines. That makes for a neat chart. Each of those lines is essentially the revenue trend. So 11, since the beginning of 2029, 11 quarters of consecutive, fairly good sequential quarter-on-quarter growth. It's been actually pretty much within thresholds for 3 years in a row, and that's where we intend to keep it. Happy to sort of delve into details on anything as far as numbers are concerned as we go into it. So just to share, what do we hold ourselves against, right, as the management team inside Aurionpro? The goal is to always stay top quartile across some key metrics that we track, right? And this is where I'm talking about generate long term. This is where I want to be kind of goals, right? Revenue, like I said, we've last 17 years grown at a CAGR of 26%. I don't see why we can keep growing at that given the amount of repurposing we've done in the business. We will stick to the 25 to 30%. For this year specifically, because of the order book position and all, we said 30 to 35 in terms of the range, but materially it's not going to change that much long term. EBITDA margin, we will keep at, so we finished this year at about 22. We will keep it at between 20 and 22 as we go. The way to look at our EBITDA, I've explained this before on a few earnings calls. So in the product business, you do need to expend a lot of capital in terms of building out products. But we are not big fans of adding on a lot of intangibles to a balance sheet. So we're following a policy that unless there is, like for example, also there is a specific regulatory reason, we do not normally capitalize. We will keep expensing our R&D. That is going at a clip of somewhere here 7 to 8%, right? So the way to look at EBITDA is if you're capitalizing, that's 20% EBITDA, right? But because we don't want to do it, we will keep on doing that expense. We will keep at that level. I'm pretty sure, as we go, we'll make the point that, oh yeah, but as you get scale, your economics will improve. Yes, it may, but we will use the excess and pour it back. So we'll keep the EBITDA at 20 to 22, that's the plan. Even when we get an excess, we'll pour it back into R&D, and probably you'll see the R&D spend go up rather than the EBITDA number go up, right? So I probably, it's easier way to understand it, and the PAT, we've kept it at 15 to 16 for the last 3 years. I think that's where we plan to keep it in terms of our goals. So this next one is a pretty interesting one. So we don't really need to sell much to deliver our next 12 months of growth. That's the nature of the products business. So by and large, what we try to do is 75% of the incremental growth that we're targeting for the year would coming from the existing base. And we try and hold to that metric so that we're not adding on too many new customers. That's the point I was trying to make earlier about going deep with specific clients rather than having a very large number of clients, because it's not really a great thing. We would much rather have few strategic customers with whom we are growing rather than have a very large number of customers. So that 75% again is a hard bar that we do, and capital, as I said, maybe the bar gets raised in the next couple of years. But by and large, we will keep the 25% when it comes to the long-term growth. So that's in a nutshell is what we're trying to do. If you take away two numbers, revenue, we will continue to target growing at 25 to 30 over the long term, and EBITDA will try to keep it 21 to 22 over the long term. I think that's essentially what we do. So the final thing. So one of the questions I always like asking every manager who reports to me, right? So when it comes to growth, it's really so growth is an aspirational thing. Everyone wants to grow 30%, and some want to grow at 50%, right? And you say, all right. So to me, it's a very simple thing. But can you explain in 50 seconds, what really gives you the right to grow at that really sort of 30% or 35%, whatever you say, right? And so I'll probably try and do that test for myself and explain in very simple terms what really gives us the right to grow, and which is essentially a very, very simple thing. One, when I build out a tier 1 product in a very, very large segment, right? And I combine that with so I call it small market share. My team didn't like it, so they changed it to headroom for growth. But basically, when you combine a very competitive global product with a very, very large market, that product should be able to win sort of in the globe, and combine that with a very small share that we are at. So even when I call CNO leaders in Asia, at a global level, we have less than 4% market share in the space. You really have the right to go, and how can you not go, right, when you have that? So that is essentially what I would want to deal with. Thank you for your time. We will spend more time when it comes to Q&A. The tougher the questions, the more interesting for us as we go, right? But before that, I will invite. Am I inviting Shekhar and Sanjay for the panel? Okay, good. Thank you very much.
Thank you so much, Ashish, for that brief insight into Aurionpro, and I'm sure you want to learn more. The experience zone is here, and we are going to have a spotlight discussion right now, ladies and gentlemen. It's time to shine the spotlight on an engaging and thought-provoking discussion, something we are all eager for. As you see, the stage is also being set up for the same. Well, let's move to the next segment, that is the spotlight discussion. In this captivating session, we bring you the brightest minds who will delve deeper into the business and the way ahead. I'd like to first introduce you to our moderator for the session. We have Ms. Ruchira Sharma, a seasoned communication specialist and content strategist with over 20 years of experience in TV, events, and print. Ruchira will be leading our panel discussion today, so please put your hands together and welcome her on stage. Can we do that, ladies and gentlemen? Yes? And now let let me introduce you to our panelists for the spotlight discussion. We have with us Mr. Shekhar Mulati, President and Global Head Banking. Shekhar oversees sales, operation and delivery across Asia Pacific, the Middle East and Africa. Ladies and gentlemen, Shekhar Mulati. Very warm welcome to you. We also have on our panel Mr. Sanjay Bali, President and Global Head Tech Innovation Group. Sanjay takes care of business and government and public sector for Aurionpro. Very warm welcome to you, gentlemen. And Ruchira, over to you.
Thank you so much. Congratulate us on a very comprehensive and detailed presentation, and definitely a 30% revenue growth is a great target. And I'm happy to
लगाया नहीं आ गया ओके बोला
Let me begin by putting Warren Buffett, because he is the investor in Aurionpro. So Warren Buffett has previously said many things, but one of them, which we are going to focus on today, is digital transformation. He said that digital transformation is a business reality, a fundamental business reality, and according to experts, businesses do not wake up to need transition.
क्रॉस में है ना इसके लिए वाटर बैलेंस बराबर
Can you hear me now? All right, well, welcome again. It's great to be here with all of you. And as I mentioned before, thank you, Kathy, and thank you to Ashish for their comprehensive report.
इसके हिसाब से
And
कर
as I
रहा
welcome you all to this panel discussion, and I have two visionaries with me, but we will come back to that later. I will just take a few minutes to kind of set the context. So, as I was mentioning, Warren Buffett, the legendary investor, said that digital transformation is a fundamental reality for all businesses. And truly, if businesses do not wake up to the need for digital transition, they will be forced to either phase out and fade out. So while there are some businesses which are actually struggling to go digital, there are some organizations that are working towards making this whole journey smooth and seamless. And Aurionpro, we're very proud to share with you, is a front runner in this space. But because all of you are investors, I don't expect you to just take my word for it. So let me share some numbers. Aurionpro has close to 2,000 crore market capitalization. It has a presence across the world in more than 14 countries. It has more than 100 customers. And it offers unique, innovative platform-led solutions which are backed by more than 2,000 technologists. So those are some great numbers there. And of course, it is accelerating enterprise transformation globally across sectors, across banking, across mobility, and across government sectors. But how does it really do that, and what are the future growth plans? For that, I'm going to come to our special guest today. We have with us Mr. Shekhar Mulati and Mr. Sanjay. So let me begin by asking you. We heard about the growth plans, we heard about the expansion plans, and you're at a company which is enabling other enterprises to pivot or to grow. So share which is the major milestones that you have achieved as a visionary, as a leader, in your entire tenure, which is more than a decade long, at home.
Right. You're working, okay?
Yeah, it's very
Yeah, well, gosh, it's hard to pick any one milestone, right? It's been 10 or more than 10 very eventful years, all leading up to this moment now, where we feel, we're really ready to play a much bigger part in the world of global technology strategy, with the kind of demand runway that we see ahead of us, and the confidence that we now have that the products that we have built are truly world class. It's not easy to build technology products. It's not easy to build something that is tier one, and that is tier one recognized by not just us, but by those who watch the industry. So it's really been a journey of overcoming the many obstacles to get to where we are, and it's just feels great that the time is now.
All right. Anyone take a milestone that you like to share?
Well, I think the last year was very momentous. In the banking world for two major reasons. First is we got validation from the industry leading analysts to say we are in the leadership role.
All right.
That was big. And the other is, we got recognition from already the best in the world, from trade finance, saying that they want to use our technology to grow, their business further. It's like, Apple choosing Foxconn, right? For sure that if Apple is that good, Foxconn had better be damn good too.
Definitely, and that's how you're accelerating enterprise transformation across the world. All right, thank you for that. Coming to you, Mr. Sanjay, what is your major milestone that you'd like to share with the audience here?
First of all, good afternoon, everyone. Very happy to see everyone sitting out there and boarding with the presence of all our investors and analysts here. Every year, actually, every year was a kind of event for me. I joined almost 10 years back. We started with, I was given the responsibility to start the government business. And till 2016-17, we did everything eventful in the government. As Ashish was telling, the digital part of growing India almost 10 years now. And 2014 was something, change of tide when the new government, they were more focusing on the digital side of the world, and they wanted to take India to the digital stride. We became immediately the part of the growth. And 2017, when we first won our transit business or the mobility business project with Nagpur Metro, we realized that this is the time when the world is moving towards digitizing the transit business. And as we were growing there, the next, as you asked for, change the path, we thought of that, this is the time we should have something which is scalable, which can grow at a fast pace. And then we converted something and we named TIG, Tech Innovation Group. And we created a service business line, which just was not government, but it was cutting across all the verticals. So we thought of what to do. So we thought, yes, transit business is the right thing, and we're moving in the right direction, and which is a global scalable thing. What was next? The next thing is everybody is moving towards data, AI, OTT platform, everything. Can we be part of that? No, it's very difficult. Then what we should do? We said, let's build it for you. So that's how, Bhaskar joined us from IBM, and we created a data center platform, we created a data center business, and when we were doing the data center business, we realized what to do next. So that should be the next scalable thing. We said, who's going to take care of the data center? So we got into the hybrid cloud service businesses, we brought in another expert from this. Of course, it was a lot of discussions and a lot of things going on, so we got into a thing, and then we scaled up into hybrid cloud services. So being in hybrid cloud services just not is for the purpose of work, but we thought it can also enhance our existing platforms, like what me and Shekhar were thinking of collaborating and see how we can give an end-to-end solution to everyone. So we just collaborated and see that, okay, if we are going to sell our IPs, we need to serve our customer with bringing them on the cloud platform or everything like that. So we got another scalable product is our hybrid cloud services. Now, as the fourth part which Ashish told that we've been the part of the digital platform. I can't name many things here because we are bound by the NDA, so we got into with the government of India. And we tied up in many of the projects, some of them we announced, so I can tell you that we were part of the first Indian digital platform creation. That was almost 2017, just before COVID, where we went into 3D city, creating a virtual twin city. So that was one of the specializations we did on the digital platform and successfully completed the project. Second, we went into the next digital platform with Government of India and even all the big, we can say, ports and everything, digitization of the ports. So we just went into the fourth part of the digitization of the port. And of course, we are building many of the software applications and being part of many of things which I can announce with the government. And we are building a digital platform for the government.
Multiple milestones, not one.
Absolutely.
All right, coming back to you, Mr. Shekhar. The company has, of course, won multiple awards, many accolades. but being the sole Indian vendor to be recognized as the global category leader in the Chartis Risk Tech quadrant is of course an impressive feat. So could you really take us through that and tell us more about that and how does it make it, the whole proposition absolutely unique and different from the others?
Well, I think some of the answers are in your question.
Yes.
Right? Like I mentioned before, building a product, a technology product, is not easy. It takes a lot of effort, and when you're investing all that time and effort, you don't really know what is your success rate going to be. Is it something that customers will actually see value in and buy? Right? Even though you might have put in your best efforts, best investments, the failure rate in products is also very high. Right? The risk technology space is in itself, a very wide, space. The recent years of the pandemic, the global financial crisis, it's accentuated the importance of risk management. And a industry watcher like Chartis. So Chartis is like the Gartner of this technology, right? They go deep into analyzing every major vendor playing in this space. So we didn't know about them. They certainly didn't know about us. As we got to meet them, we were astonished at the level of depth they went into to try and understand what we bring to the table. And when they mapped our capabilities, and they mapped it into what's called the leadership quadrant, right? Of course, we're the only India-based vendor, we're the only Asia-based vendor, but all the other players in that quadrant are multi-billion-dollar companies, right? And we say, wow, if the industry expert sees us in that bracket, I mean, we have to look at ourselves in the mirror and say, look, this is where we can go.
Absolutely. Thank you for sharing that. Coming to you, Mr. Sanjay, could you, provide more insights about winning the highly esteemed global RFP from the Department of Transportation? That is also quite an impressive achievement.
Yeah, of course. And we were looking for scale up in the global market, and what better than proving your skills or proving your things in US. So just before COVID, and somewhere around 2017-18, I just give you a brief about how the US market works. In the US market, you see all the biggies, all the large deals, and they're $multi-billion for multi-years, deals, and they're working on it. But if you see the rest of the US, which is a big market, the small players were not, coming up, or they were not getting the right kind of focus from these large guys, and then Department of California came up and said that we can't be left behind. There are 300, kind of agencies, small, big, right from having a 50-bus project, 50 buses, to almost 2,000 buses, and light rail and other transportation system. So we need to, change the culture and see how we can do these traveling for the citizens. So they asked, they published an expression of interest for the companies to come and show their technical capabilities, and that's how we participated. It was absolutely thorough, testing done, because we were competing against the world, and fortunately we were being selected as among the top 6 players with our capabilities, our products, which were absolutely world class. And we could deliver it what people were working on from there. So once we got selected, there was a closed bid call, as normally it does, and that's how we won the bid. And now we got one of we have already implemented 7 out of 300, and we are the leaders right now. If you see on this, we are the leaders who have implemented the maximum out of in California. And the best one, which I personally want to go, is Anaheim, which is Disneyland, of course. Where so many people are going to go, and they will take their kids, and when they go there and we find the validators from the Indian company, and using them, so it would be fun, and we will feel very proud that we are one of the leaders.
That's definitely. I'm going to plan my trip soon.
Yeah, I'll get you discounts also.
Great, looking forward. More investors will come to you for that. But anyway, coming back to you, Mr. Shekhar. Of course, partnerships are very crucial for any organization. So could you tell us a little bit about the recent Finastra partnership and what kind of value does it really bring to the table?
Yeah, partnerships are, really important for a company of our scale. Where we are versus where we want to be is a big, big distance, and we want to use every lever that we find available to get there. A little bit, about Finastra. Finastra is a well-known, company, but in the context of trade finance, they are the global leader. 6% of trade, 6% of global trade goes through Finastra's platforms. That's the magnitude of their trade finance business. And for a company of that market leadership position, that scale, they ran a RFP process, a global RFP, 2 years, to find a company that can provide them a risk engine. Right? Because trade now is all digital. It's a highly risky business, and they ultimately landed on us, right? And selected us, after a 2-year due diligence process. Right. So it really gave us the confidence that the people doing due diligence on us are product experts themselves for a lot longer than we have been. And so there are so many best practices that we can also learn from.
Absolutely. And you learn from each other.
Certainly from each other, but now in the process of them now taking us to market, it benefits us in a few very key ways. First of all, whenever they're selling to a new customer, it's their trade finance platform powered by our risk management engine. This is number one. The second is that on their existing base, so Finastra is a long-standing company. They have over 500 leading banks as their existing customers. They're going to go back to those customers and say, hey, you know what? Use our latest risk management engine, right, to power your business and transform your trade finance business to the next step. Right. So and the third is they're taking us to geographies that for us will take either longer time or intensive investment to get there. Like yesterday, I was on a call with Finastra and one of the largest banks in Europe. So it's really a very shows us upside on multiple dimensions, right? And we're very excited about it.
And that was quite phenomenal the way it has all panned out. Coming back to you, if you could also elaborate, of course the company has multiple feathers in its cap, but you've recently been recognized as one of the global partners of MasterCard and SBI, and that itself is also a big achievement. So could you tell us about what it really offer to you as an organization?
Yeah, it's a very interesting journey for us. Normally, I like to know to everyone, when we are in Bombay, part of Bollywood, when a new hero comes into the space, every art director waits for him to see that how he's going to perform in the first picture. If he does it well, then they try to cast him in the next movie, and then his value increases. So similarly, Nagpur gave us the chance with State Bank of India. First of all, State Bank of India put a lot of trust in us when we did the first project for Nagpur Metro on a true open loop, which where Digital India was moving as using National Common Mobility Card, the RuPay card. So we successfully implemented that with SBI, and immediately we got the next one was Noida Metro. So after successful implementation and during the COVID period when the world was moving towards contactless, we did the pilot projects in Latin, that is Lima, Peru, and then we did, when we were implementing the California bid, MasterCard recognized us. We were doing multiple discussions with them, and then we won along with them the entire country for implementation on the MPGs. This is MasterCard Payment Gateway Solutions. for Maldives. So we got the first entire country to implement not only the buses but the ferry system also, because Maldives is pretty scattered along and all those things. So we did in Malay, and we are the first in the Southeast Asia who integrated with the MPGS platform, which doesn't only accept the MasterCard, credit card or debit card when you travel, but you can also use Visa, you can use Euro, or even you can use Amex card to implement. So that's how we are now doing multiple projects with them, and we got selected as one of the partners.
Congratulations on that. It's actually wonderful. But Mr. Shekhar, earlier also Mr. Ashish mentioned that products are extremely important, and products and performance define any company's success. So let's talk about product launches. If you could tell us a little bit about Aurionpro and what is its USP, what is the differentiator, and what makes it unique.
Right. Well, if you look at the digitization journey of banks, probably the last 10 years or so, the first phase, a lot of that digitization has happened on the retail banking space. Now, all of us as customers or consumers of banks, we're used to a very digital experience. On the corporate side, that time is coming now. All banks are focusing their investment, their attention on giving corporate customers that same level of digital experience. And we feel we are at the right place at the right time. Because the banks are investing, and that's where we have built our Digi, which is our digital engagement platform, which will help corporates have a great user experience, reduce their transaction processing costs, and for the banks, really make their customers a lot more sticky. So we're in that right place, we're in that right time. We have invested in things like UX or user experience, which traditionally on the corporate banking side, people don't spend a lot of time on it. Because corporate bank customers, it's usually a lot of bulk work, grunt work, so it's very detailed, complex tables. So it doesn't naturally lend itself to UI and UX. We have gone against the grain. We've invested in that. Just yesterday we were with one of the largest banks in India, showcasing what we have, and the bankers were just blown away. They said, we didn't expect to see this on the corporate side. Your corporate digitization looks even better than what we've seen on the retail side.
Definitely. In fact, you spoke about user experience. So I have recently read a report which said that most companies have only one shot to impress their users, because now the millennials, the Gen Z, they want the best experiences at the click of a button. So definitely working towards an optimum user experience is critical for companies, and thank you for sharing what you did. Coming to you, if you could tell us about your new product launch, which is ECR1, and about also the market potential that it has to offer.
Yes. Of course, this is one of the most hard, and the entire R&D team and everyone, it's tough what Ashish was saying to create a product. It took us almost 2.5, 3 years to come around, and it's a very interesting journey for that. In the world, there are around about 6 or 7 players who have it, or they don't give, like for Singapore. ST Micro builds it only for themselves and for Singapore, and there are a few more like globally, who are there who's giving this particular product. And it's kind of a monopoly onto this product. So we thought, as we are moving towards being an end-to-end player, right from having a acquire and issues platform to automatic fare collection system, our own hardware, but the heart of the hardware, we are always dependent on a third party. And there we thought of that, okay, let's create some product which doesn't only goes into our own validators, but we can sell it to the upcoming people, or they are creating validators across the globe. And not only onto the transit, but the next big business which is coming up is the non-transit part. That's the edge of anything. When you get down to metro, you use a parking lot, you go to and use the cycle, you use everything. So you need to have some product which goes into every aspect. So we created this ECR1,
First of all, was for our consumption for ourselves. So it's a product. So if you use your tap, you can not only accept RuPay, but you can use Master Visa, acceptance. So it was launched in Barcelona. And already we are working with the non-transit part of the business. It's like bike sharing, parking lots. And in India, very interesting use case came up, and somebody asked me, can you accept the digital RTO cards? Our license cards or our, RCs, and to check. We said, why not? If that has been given, we can integrate anything with this. So this has become a very large, global, scalable, how much we can sell in that market or for anyone. So this is what we could achieve in this product, which was successfully launched in Barcelona.
All right, so definitely the opportunities are endless. But since the company is enabling multiple enterprises to pivot to growth and adopt and adapt to a new paradigm of innovation, let's do some crystal ball gazing. If I ask you, Mr. Shekhar, what is your vision for the next decade? Or what is your vision for the year 2030? Where do you see the company? So what would you say?
I think we are quite confident in where we are going and also how we are going to get there. Right? You might recall, when Ashish was making this presentation, he had that Venn diagram in this section. Right?
Yes.
We've chosen segments where there's a long demand runway. Then we've chosen those segments where the leadership is either fragmented or contested. So that gives us a good shot at a leadership position. And we've chosen segments where we have the ready capability. We're not thinking of it on paper. Our products are ready, right, to occupy a tier 1 ranking. So we feel we have the ingredients. What we need to do is, step up our sales and marketing, and growth engine, and with that get into a top 3 position globally. That's really what I see for ourselves by 2030.
Great, thank you for sharing that vision. Mr. Sanjay, what is your vision for the next few years?
Yes, Shekhar and Ashish has already elaborated that, where we are moving. We are absolutely aligned to our vision as an organization. We are pretty clear, as Ashish has given a very elaborated thing, so I will not say much about it, but absolutely we know where to go, how to scale, and each of our businesses which we have taken, the responsibility which I carry on the Tech Innovation Group, or we are collaborating with, everything within the organization.
Yes.
So we are absolutely focused and ready to go.
All right. So bright plans for the future. With one last question before we wrap up this spotlight discussion, and I'll start with you. A quick key takeaway that you'd like to leave our audience with, all our investors here.
Please buy our shares.
That's all.
Invest in us. We are Lambi Desh Ka Ghoda. So when you invest in us, I'm sure we'll get whatever back, much bigger. Thank you so much.
That was quite candid and short and sweet. Mr. Shekhar, what's your take? What would you like to leave the audience with?
I just think the timing is now. We're ready. Yeah, we're equipped and we're ready, and we're looking forward to the future.
All right, thank you so much, gentlemen, for that insightful discussion. I'm glad to hear your experiences, your learnings, and thank you to our audience. And just to wrap up, definitely companies need to pivot to growth, and as we are doing today, accelerating enterprise transformation across the world, companies need to embrace change and adapt to the new paradigm of innovation to stay agile and stay relevant. And that's what Aurionpro enables enterprises to do. So thank you all, and I hope you enjoyed this discussion. And handing over to you, Captain. Thank you.
Thank you so much, Ruchira. Thank you, gentlemen. I request you to please take a seat in the audience. Can we have one more big round of applause for that very insightful discussion? And as we promised, for a very engaging Q&A, which is going to happen right now, we're just going to set up the stage one more time. So if you have any questions, ladies and gentlemen, just raise your hand and we'll bring the mic to you. Just a few feelers, or rather hygiene announcements I'd like to make here. Please restrict one question per person. Should you have any more questions, we can connect during high tea, or also you can write to us at investor@aurionpro.com. We will have that email ID also flashing on the screen, as you can see right here. You can take a quick check on this email ID, just write it down. If you have any more further questions, you can discuss it during high tea, or you can also write to us and we'll circle back to all of you. Alright, and for this Q&A discussion, I'm not going to be answering your questions. We have experts here who will answer all your questions. Just give us a moment to set up the stage for the same. And our volunteers are on either side of the room, so you can just raise your hand and the mics will come to you. So ladies and gentlemen, now to answer your questions, may I please invite on stage one more time Ashish, Shekhar and Sanjay. Welcome gentlemen, welcome back. So now ladies and gentlemen, the floor is open for your questions. Our experts are here on the stage. I'd like you to just please raise your hand. Great opportunity to quickly get any of your queries resolved. Yes, we're bringing the mic to you, sir. Just give us a moment.
Sir, Ramesh Bhojwani from Mehta and Maki. Yes, sorry.
Can you please stand up? It will be great.
This is Ramesh Bhojwani from Mehta and Maki.
लाइट बढ़ा रहे हैं ये खड़ा हो गया
All encompassing story right from the beginning. And the 2005 to 2023 journey of 18 years, I see that the company is on the threshold of an explosive growth. Whereas your projections of 25%, 30%, 22%, and 15% top line EBITDA and PAT, I felt were conservative, but nevertheless. And the question which came to my mind was, you are at the head of your organization, so always there is a blueprint in your boardroom of, like many good corporates, they have set themselves a goal to 10x in the next 10 years. What will be your goal? Will it be 10x in the next 10 years or more?
बहुत ज़्यादा
So look,
इसमें
two sort of
Lining
things that
आएगा।
there, right? One is 25%,
Screen
25% is too conservative.
Flickering.
The idea is product business, IT business is in general, it's a very hard business, right? If I was running a services business, I had 10,000 more people, I had 10,000 more people revenue. There's really no complexity to it. I just hire a few more project managers, few more program managers, the thing gets done. In the product business, if you go too fast, you're really looking at the whole chain, especially for a full spectrum player like us. Honestly, it's very hard to benchmark us with others because we really play the whole game, hardware to software, and it involves manufacturing capacity, it involves hardware R&D, it involves software development, it involves operations. So if you run too fast, you have like this disappointing client. Delivery reputation is very, very important to us. For me, it was very clear sort of messaging to the team always is delivery reputation over running any single day, right? And we will hold ourselves to it. or the right level for us to be at. Now, like I said, another 12, 24 months, we feel we are ready for scale, which means the manufacturing is lined up, which means we've got the right teams in the right places and stuff. We will scale, and then we will come back to you and we'll tell you we are ready to grow faster. I think there is no need to really. It's a 15-20 year play to create a global leader. There is no need to do that. That brings me to the second thing, the 10x game. Right? We're not after the 10x game. The goal is very, very simple. So someone was asking me just last week, right, or a couple of weeks back. We say, oh, every Indian IT firm is in the US. Why you guys are in the US? Why do you keep doing this to Asia at all? And the reality is, how many Indian products do you actually see in the US? I don't mean software products. I mean soap, shampoo, anything. Today you go to California, you actually tap in, tap out on the bus. You are doing it on a provider per unit with the payment stack behind everything else, right? It takes time. It's hard. It's a 15-20 year play. It's not going to happen in 2 years, right? So you're going after becoming a top 2, top 3 player in very, very large segments. We have to focus on the product, have to focus on delivery. That time will come. There is no need to, you're a $20 billion transit player. I mean, $25 billion, we don't declare numbers on transit, but whatever it is, right? All together, we are a sub-$100 million company. Yeah. I mean, 10x is a billion. You're going after very large spaces, right? I mean, so what is the point? Right? So I think the goal is go for leadership, very large segments. Let's see, the numbers will come and let's see what those numbers are. I mean, what is the point in putting a billion? Everyone, like every CEO likes saying, I will become $1 billion company by 2030. What is the point? We'll see where we get to, right? But we'll keep growing at the rate we say. And when we're ready to accelerate, we will come back, we will tell you we're ready to accelerate.
Perfect. Thank you and all the best.
Thank you for your question. Do you have any other question? We'll bring the mic to you. Please raise your hand. What's the next question? Yes. The mic is coming to you.
This is Richa from Equity Master. Sir, a very engaging presentation. My question is, we do see the growth opportunities. What are the top 3 challenges or risks that you foresee, constraints in achieving this goal of 25 to 30%?
Sorry, Richa, I did not get that fully. So, top 3 what?
Top 3 challenges or risks or constraints that you see in achieving that goal.
Okay, yeah, I got that. So, about the presentation, honestly, I took a quick feedback after that, and people said the start was a bit shaky. But thanks for the comment. I hope it was engaging. But I think the biggest risk we have is the execution risk on this one, right? If you look at our core products, right, on Shaker's side, on the corporate loan regulations, collateral, limit, transaction banking, the build is done. We've got the core products ready to play at a global stage. Same thing on the Sanjay's side. You've got probably one of the most integrated end-to-end stack you will see in the transit space, right? And I think the big risk is execution. It's can we scale? We've never been a 1,000 crore company. We've never been a 10,000 crore company. We just not need these, right? That's why I say it's very important to calibrate the growth, right? We need to have the right organization. We need to have the manufacturing capacity lined up. We did this tie-up with Microeconomics on Sanjay's side in Malaysia. Now we're going to scale up manufacturing capacity. At least the variable side is taken care of, right? We'll be trying to scale up Roshi. That side will get taken care of in 12 months or something. The scaling of the R&D setup, it takes time. So, there is, I think that is the biggest risk. We become too big and the execution has not caught up. We are being very, very careful about the growth rates. We're being very, very careful about the organization structure. We are attracting probably the best talent you find anywhere in the world in the specific spaces we are seeking. And I think that is our way of mitigating that risk. Right? We don't need a lot of people. We're not a services firm. But we need a lot of very high quality people. We need a structure that supports them. We need capital behind the manufacturing capacity that go in. We need to ship on time. We need to ship error-free. And I think that is where the sort of biggest risk. That is where, between those things, organization, capacity, stuff, that is the number 1, number 2, number 3. I think it is essentially execution risk. We have to be very careful as we go. I think that's essentially the problem.
Thank you for your question. Yes, sir, bringing the mic to you.
center opportunity, I think you mentioned it in your presentation and your strategy. Could you highlight and tell us what exactly is the kind of opportunity of growth for Aurionpro there, and how can the company capitalize? Already some work has been going on. I would believe in the next say 2 to 3 years, we're going to see a lot of data center capacity getting added. So in that position, how are you planning to capitalize on that?
Probably, Avinash, let Sanjay start with it and then I'll finish.
Sure. Thank you. Actually, this is if you see multiple papers, multiple things, India itself is going to be around about $5 billion, US dollar kind of opportunity in building, and India is becoming the hub of, all these data center platforms. So yes, we have a very talented team with us, and a very unique team, which we have our own design capabilities of data center. That's very few have. And then we have the capability to implement the design which we have in the data centers. And the third thing which we have is our consulting business onto it. So it's absolutely complete stack on the data center business. Yes, we are taking step by step on towards what Ashish said, that we are just building our delivery capabilities around it, and we are picking. Of course, we are getting a lot of opportunities on our way, and we are working with all those. And one of the few things, partner. You asked for a partner or a customer which we have right now.
Yeah, I think which are the customers, and going forward, how would you be scaling up this opportunity? What kind of growth do you visualize?
So I said, 4 billion is the opportunity. Kind of 5 billion is the opportunity. Of course, it depends on Bhaskar, how much it can scale up the delivery. Of course, we have a plan onto it, and we are moving at a very good pace. Some of the customers which we are doing is Webworks, Iron Mountain. We recently, launched, and they announced it, and they declared us as one of the platinum or titanium partners for them. We did 5 data centers together for them. We did something with Tata projects, doing something for Yota. We did IIT Guwahati. So there's a list which is happening out there, and there are many which we cannot announce right now, but there are many in the pipeline to do that. And one of the, I cannot announce the name, but one of the very leading FI, we have been chosen to build the latest data center for them, which has multiple things. I cannot divulge much, but that is one of the prestigious things that Indian company has been chosen to design an Indian data center for the largest FI. So that's one thing I can tell you.
Thank you.
That's probably one of the most complex deals. That was probably one of the most complex deals in the market that Sanjay Bhaskar picked up. So that sort of really furnished our credentials in this space. I think probably I'll finish off. The answer to that is Sanjay's business last year grew at 55%. I think the data center setup is growing faster than that, most likely, right? So it is really powering growth on the TLD side.
That's a great number. Any other questions? Please do raise your hand. Yes, sir. Bringing the mic to you. Can somebody go at the back, please?
You recently got a license for payment aggregator. What is the game plan for that? When do you get started? And what sort of scalability you think in the next 2 to 3 years you'll have?
So payment aggregator. So the question was about payment aggregator license that we got recently, and I think you have to go back to that theme of backward integrating into the chains that we are in, right? So payment business for us is a very specialized business at a large scale, mostly in the market. I would say, it's a questionable business in terms of who makes money, who doesn't make money, and to what extent they can make money. So we've chosen to be very, very strategic. Our goal is not to become the 51st payment gateway in India and join the race to bottom margins. Our goal is to help where we already are present, expand the margins that we have, or expand the share we get from the revenue. By transit, for example, we hold the business, we have the contracts, we can play, we can control the margins that come through it. Uncontested spaces or less contested spaces, for example, B2B payments that go through our SME supply chain platform, the supplier payments, things like that. So we will compete very strategically in the place. The goal of the business is to help us backward integrate into the value chains we're already in, right, and make money there. We will, of course, flesh the business around. I think it's a great demonstrator of what we are capable of as a business in terms of putting things in place. And RBI approval, as many of you don't know, it's a very, very rigorous process. There are many known names who've been applying for licenses and not getting it for quite some time. Our team came together because we always had the tech stack, of course, because we supply payment technology to other providers, but getting the process in place, getting the operations in place, and getting to that in-principle approval, I think that really points to the quality of product, the quality of operations that we built up, right? And we will be very strategic with the business, but it will scale quite significantly as we go.
So that will be a little longer journey, or maybe a year or so to get started? Because you're already entrenched into payments.
I didn't get the question, sorry.
I said you are already entrenched into the payment part.
Yeah.
You make the software for others. You're handling the payments.
Yeah.
So, as an aggregator, you would take a long time, or you would get started?
No, sir, it won't take time. So we're already live with B2C in India. We're live with B2B in Singapore. We got the offering up and ready. We will just scale in places where we want to scale.
Right. And so would you go for licenses elsewhere also in the world, or this India is enough?
I'm sorry, the mic is not very clear. I didn't hear that. It's very faint.
I'm asking, like, this licenses, the aggregator business, you are focusing in India only, or you would like to go and fetch licenses elsewhere also in the world?
So we have applied in Singapore as well for the licenses, because we launched the SME platform or RUBIs in Singapore, India, as well as other markets, and it plays well together with that platform. So that is a license that is still pending evaluation from the Monetary Authority of Singapore. Largely, we will be an Asia play, but right now, at the moment, it's essentially India and Singapore.
Thank you.
Thank you, sir. Thank you for your question. Do you have any other question? Please do raise your hand. Yes. Come on. Right, is coming to you, sir.
Hi Ashish, this is Nilesh from Envision Capital. I have a bunch of questions. One is, if you can give some flavor on the competitive environment and some of your major strategic areas. What are the kind of players that we compete with? And talk about a few deals, and if you could just give some flavor in terms of what kind of competition we face. That's one. Two is, what I gather from your presentation is that we probably have a bunch of revenue streams. There are some machines that we basically provide, and maybe in some cases we account for revenues on a sale basis, maybe in some cases it's annuities spread over years. We have technology products that we sell, and maybe there's some bit of services that we also provide. So if you kind of really look at, say, the $100 million value, if you could just kind of give a flavor in terms of what comes in as direct product sales, what comes in as maybe products as a service, some as maybe software or software products as a service. If you could give that flavor as well, that just really helps us to kind of see how the basket is composed of.
Yeah, so thanks, Nilesh. So look, that's a whole bunch of questions, right? So I'll probably hit a few areas and I'll see if Shekhar or Sanjay want to add to it, right? Competitive environment, it really varies depending on what we're selling, but on the software side, for example, lending, if you have a look at it, we would compete typically with the few key players who have a loan origination system, mainly FIS and Moody's in most markets, right? So I think that's, so typically you compete with an FIS Moody's, in some cases you compete with Finastra, although they don't play so much in the Asian market on the CLO side. On the trade side, you compete with mostly Finastra, Interact, players like that, right? So that's largely the game. It's usually the large global software players who compete on the banking side. On the transit side, again, they're usually the large global transit players, Analyst, Wix, a few of the specialized players. It's typically product shops, it's typically shops which are known globally, and the global players there compete globally. On the transit side, we also compete more or less globally these days. On the banking side, we are core Asian, right? So that's essentially the difference. Among the other things that you You look at how do we sell. On the banking side, typically banks would buy a license. That license could go as an enterprise, could go as a SaaS, could go as a software rental. If you do a typical deal, I would say just as a ballpark, roughly it's a third license, a third implementation, and a third AMC over a 5-year period, right? So I think that's essentially how the sale gets done. On the transit side, it's a lot more complex game. There would be large long-term revenue share deals. The only thing to note there is, as an organization, we've developed a distaste for CapEx deals. So we don't do CapEx, so we would prefer some one-off payments, where we can sell our units, and then it becomes almost like a software sale, right? So especially as we go out, so Sanjay also explained it here. On the tech stack, we are completely cutting edge. We can go head-to-head with anyone. On the balance sheet, we don't even try. There is no point, right? So if it's a large CapEx-oriented deal, we'll partner with a MasterCard, partner with the State Bank of India, partner with someone else who can come up with the capital and will come with the technology, right? So typically that will change the nature of payment because the capital deals are usually revenue share. But when we take one-off payments, we will just take that and run the AMCs on it, just like you run it on software. Right? So that's sort of the thing in a nutshell. Anything you guys want to add? You can.
Yeah. So transit, in India we are there. Of course, as share we said, so like UP, Haryana, we are doing the rev share. But when it becomes to Kanpur Metro, it was SBI who invested the money, and we are the tech players. Some are partial capex and opex deals, so it's a mix of on the transit side. Sure.
I think, on the competitive landscape, right, like Ashish mentioned, our competitors now are mostly the big boys. So we are the David to their Goliath. The advantage for us is that we know all about them. They have no idea who we are. Right? So we have the element of surprise, saying, hey, where did this company suddenly come in and win this bid from under our numbers? Right? And we've done that on a couple of occasions. And we think we can do that for another.
Thank you for your question. Yes. Can we bring the mic to the first table? Thank you.
Hi, thanks. I just wanted to sort of ask you on your R&D, your R&D budget this year, as you said, 7-8%, which had 750 crores in it. Seems rather small when you're competing with large global players and that would across multiple platforms, multiple sort of segments. I'm just wondering what kind of disadvantage does it place you at when you try to compete with these guys? And why do you restrict yourself at 7-8%? What stops you from going to 20% of sales?
Yeah, that's a great question. I think so. There's a lot of R&D that gets done by the so-called startups or privately listed players who essentially have almost no limit on the amount of R&D spend that they can do because there is no real pressure to earn. And in the product business, if you let that if you go down that third, you can really go wild with it. There is really no limit to the amount of spend you can do. What we chose, one, because we are a listed player, and second, we want to be responsible for what we spend, and also accountable to our shareholders. We spent the last couple of years doing our core builds. We said we will sort of center around those core IP. We will not try to build new products till we get to scale on the current ones, right? Which means the current ones don't really need that much of incremental R&D spend, right? Because the core platforms are built out, whether it's lending, whether it's transaction banking, whether it's transit. We are obviously doing new R&D to fine-tune the product for a new market or spin off an incremental module or things like that, but we are not really building out core new products. We believe we can manage that in 7 to 8%. What we do feel happening in software business, especially over the long term, the economics are highly rewarding. I mean, it's very. So what was our goal, right? We said we want to set up a products business that is run the way global software firms are run. We haven't seen too many of those happen in India. We haven't seen people run with the commercial model, the discipline of a global vendor. When you run it that way, it is fairly common with the FISs, with masters, and all to run businesses with 40-50% EBITDAs. So as you get to scale, the EBITDAs are very, very large. So your ability to route back into the business is also very high. So you will be able to do that R&D spend that we're talking about. It just needs certain skills. What we said, till we get there, let's stay focused. Let's stay focused on the products we have. Let's do the incremental builds around this. For that, 7 to 8% is enough. Right? 3 years down the line, we can revisit this question, or maybe 2 years down the line, we can revisit this question. I would think we will have enough access to up that spend without diluting the EBITDA. That's what I think. Time will tell. We can have the conversation again in 12 months, 18 months, and we'll see where we get.
Thanks. And maybe allow to ask another question. Shekhar, you talked about this risk engine bid that you entered with Finastra, I think. Curious to understand what was the risk platform before your enter and what prompted Finastra to change it?
Well, that's a great question. Yeah. So Finastra, like I mentioned, their trade, it controls 6% of world trade, right? So obviously they already have a risk engine. It was their own in-house risk engine. And what they figured out was that as the demands for risk management became more sophisticated, the need to measure and monitor those risk dimensions was more granular, that their own internal component was no longer able to do. So they had two choices. Number one, to build a fresh one, or number two, to go and find somebody else who can do it. Right? And they did that analysis as well, and they figured out that it was going to be too expensive and it will take too much time for them to build their own. That's why they decided to look for a partner, and like I mentioned, through the due diligence process and the global RFP, they found us.
So you're saying that the reason to select an outside vendor was a combination of cost as well as expertise, and was it just cost?
No, it was first of all obsolescence in their existing component.
But they could have chosen to do it themselves.
Yes, it was cost and time. Yeah. By the way, Finastra is not just the market leader; they're also the fastest growing in trade. Right? As you know, during the pandemic, supply chain and trade is really the flavor of the month. Right? So if they laid out what they felt would take another 3 to 5 years to build a new component of that robustness and sophistication, it's probably not worth their time.
One of the reasons, I think we got into this whole space of licensing technology to other large global ISVs, and in that we are basically very selectively choosing only the top vendor in each of the spaces. So who's the number one or number two lending vendor, who's the number one or two trade finance technology vendor, who's the number one or two payments guy, and just work with the big guys. But a few things that I've seen, some of it probably my personal beliefs, but I believe the really large players just don't have the agility to react to where the market is going anymore. So they are, what does a large vendor have? If I was a Finastra, you got the sales muscle, you got the account base, you obviously have the balance sheet, you got the brand and the client base, but you no longer, you have less agility to react to where the market is. The need to preserve what you have is bigger than the need to grow. And in that process, there's a lot of bureaucracy around for development, right? That's number one. The second thing is, product is a very hard game. Getting the right level of depth, getting the product right, it's a toss-up. You could start building a new product today, and lots of firms do that. You think it takes 2 years and 200 engineers. In reality, it ends up taking 5 years and 500 engineers and still doesn't get done. So there's a risk, right? So it's not just the cost. Even a player like Finastra has been building its universal banking system for, I was there in 2006, we started building it with 200 engineers. I left in 2012, it was still not built, and it's still not built. Right? So it's been 17 years, and this is a form with core banking systems, right? So, you would think it's easy, but, it's really a hit and miss, right? So, and that's the reason why we also said we don't want to build new products right now till we get to some scale, right? So it's a lot less risky, as well as you are a lot more agile if you're working with a sort of partner like us. And we said that's good for us because typically, even with the pricing and even the markups, we actually end up making more than what we normally make, and they make the EBITDA anyway. It's a good sort of sort of co-create sort of opportunity, right? And it gives us fast access to market. So yeah, a bunch of things going.
There are obviously many of the largest banks as their customers. From a bank's perspective, what will it take for them to shift their risk engine to you from the existing risk engine? And what's the incentive to do so?
Yeah, well, so we've already started having a few conversations. As we speak, one bank, which is one of the largest banks in South Asia and largest trade volumes, has already bought into it, and that integration process is underway as we speak. For others, they really want, a couple of things. Right now, they still want Finastra to be accountable for this new component they brought in. Right? And because Finastra has confidence in us, they're willing to sign an agreement. That's number one. Number two, they want to know that this risk engine is not just good for today, but for the next 5 years. Right? So these are typically the kind of questions that we've been encountering with actually a leading bank in Southeast Asia, a leading bank in the Middle East, and yesterday a leading bank in Europe.
Thank you. Yes, we have a couple of questions from the back. Please. It's on, sir.
Hello.
Can you pass on?
Yeah, good evening. This is Gaurav from Capro Capital. I have two questions. First, the promoter stake is very low in Aurionpro, and Ashish, you are steadily increasing your promoter stake. Every quarter I've been noticing. So what is the strategy, and would the promoter value more, or how it would be going forward?
So this is the story, guys, right? So promoter stake, in my hand, actually, just doesn't matter to what the company is doing. But just to give you a story, I think the promoter stake was at about 28% 3 years back. Today, if you look at the promoters have which is basically Paresh and Amit, have taken it up to almost 33%. In addition to it, there are a couple of directors, one of which is me, who bought in as well from the market. So total promoter plus director share is 51-52%. I don't think it's too low. If it went a little bit more than that, you'll be asking next meeting a question saying it's too high and there's not enough float in the market, right? So there is no end to that conversation. I think over the last 3 years it's gone up almost 20% promoter plus. So across the board of directors table is at least 52%, right? And I think that is just the right number. Personally on me, if you see, I've been buying from the market every single share for the last 3 years. I've bought every quarter. That's the story.
Thank you. Can we have our next question, please? Is the mic passed on? Has another question.
So if I understood it correctly, initially you mentioned that you want to go deep with the client and you're not interested in doing very high. So from that perspective, I just wanted some insight on what would be the share of top 5 or top 10 clients in the revenue segment.
At the moment, we really don't have the share that we want, share of wallet that we want with our clients. I think the top 10 clients together is something in the range of 35-36%. It's not a huge concentration. So the goal is this, right? I think when I say clients, we want to go big with a few players, right? Now, someone like Finasta can be a large relationship for us, and they could take us to 100 clients, which is their role, and that is fine because we are largely building on the back of one relationship, right? But what we really want to do is for some of these large banking relationships that we have, be a much wider player with them than we are. Right? So lending, we are one of the top players. We are basically the leader in the loan origination space out there, but in Southeast Asia. But our transaction banking presence in Southeast Asia is not big. Right? Transaction banking is pretty big in India and Middle East, but lending presence is not big. Right? So the question is, can we get a lot more strategic with these few? I believe we have some very talented managers who come in from organizations who run that size of relationships, and it's getting there. And the other thing is also, so like Sanjay was talking about webworks and all, there's some of these strategic relationships that are really scaling up in some specific spaces. And the more we keep our delivery reputation intact, and the more we widen our sort of mature our solution offerings to the specific markets, I think that will happen organically. So that is essentially the plan. Just go wider within the clients you already have, and that is the whole idea of getting 75% of your growth from your existing base. It's just a lot easier for me to sell the existing base. You've already done the hard work for the last 10, 15 years. Why go out and break your head against? So we will keep getting new clients, but for the in-year growth, we want it from the existing clients.
So one more question. Geographically, if you can, just give me some idea of how do you see the revenue mix 3 to 4 years from now? Currently, it is India heavy, 60% is coming from India.
Yeah.
But based on the current order book and the opportunities you see, how do you see this revenue mix? Because I believe that the margins are higher in non-Indian markets.
Yeah. So there are two types of mix we look at, right? So one is the mix between banking and TIG. The second, the mix between India and the globe. Banking and TIG, it's 52-48, sort of in the favor of banking so far. Banking grew 15% last year, TIG grew 55% last year. The hope this year is banking growth to pick up, which again the team has done a lot of build around the products. So the question is, we sell and accelerate that, and TIG, Sanjay is trying to slow the growth down, so we'll try to converge these in the middle, right? So slowly the share will change there, right? That will also affect the mix of global versus Indian, right? So I think what will happen is banking, because banking when it expands a lot more globally. TIG, the only business which is expanding globally is the transit side, right? So I think as that mix changes, you'll see the global versus Indian mix change. Right now it's a 60-40 in favor of India, right? So I would say, you said 3-4 years down the line, I would say we at least cross the 50-50 threshold, we probably go the other side, right? But it really depends on the growth rates. If TIG continues growing at 50% plus, I think that deadline will get postponed a few years, right? So those growth rates between banking and TIG have to converge at the middle, which is what we are working towards. Banking will go up. TIG, we're trying to be very selective on the business that we take on. So as it converges, you'll see that changing. Yeah, that's basically the story.
Thank you for your question. Do we have any other question? And I'll come back to you if you have more questions, yes? If you have any question, please do raise your hand. We'll bring the mic to you. Great time to ask questions because we have 4 more minutes to go. Alright, so ma'am, would you like to ask that last question then? Can we bring the mic back? Okay. After the gentleman, ma'am, I'll bring it back to you. So please go ahead. Yeah.
What is our investment global and revenue from global?
What is the revenue from global?
Yeah, what is our investment in the global and what is our revenue?
And investment as well as revenue. So investment, over the last year, we have done a lot in terms of expanding the sales channels out globally. So we've had, so on the product side, the investments are more or less set. We did a few acquisitions, SESOC, especially in Singapore, product investments on the banking side as well as transit in Singapore, Istanbul, Vietnam. I think those things have already happened. The main investment has been in expanding the market channel. So we've expanded sales teams in Southeast Asia, in US. So that has been going on. In terms of revenue, right now, Southeast Asia is a large market for us, especially on the banking software side. US, it's about 7 or 8% of revenue right now. It's not very good, but we expect that to accelerate quite rapidly, both on the banking and fintech side, as well as, so banking and fintech, for example, I think a few months back we announced this $80 million deal that we won on the payment side. I think we'll win more transactions, that number will go up, and transit is having it's a big bet for transit. Sanjay's expanded his sales team in the US. Obviously, on the back of California, there's a lot of positive sort of perception for us. We are expanding into Central America, we're expanding into Latin America, where again we expect to see a lot of business. So I think there's a lot going on for transit in Americas in general. And on the banking and fintech side, we expect to pick up a few more large deals. And so I think US will definitely go up in share as we go. Right now it's 7 to 8, and you'll see that picking up as more or less every year for the next few years.
Thank you, sir. Thank you for your question. We have a minute and a half, so ma'am, I'll bring the mic to you. You can just ask the last question for the day. Bring it back to you.
Last question. Make it count.
Sir, we are a small firm with a big vision, so I think that retaining, the leaders and people who are critical to the sales engine is very important. So could you share some of the steps that we are taking to ensure that the talent is there, and if you could also share the attrition rates in the company?
So our attrition rate last year was a bit high. This year it's down to less than 20% for sure, right? So it's a fairly acceptable rate. We've become one of the big magnets for talent, especially when it comes to high-end tech. And I think the reason for that is very simple. There is almost no one in India doing the really hard R&D that Sanjay's team is doing. There is no one, right? The amount of actual hard R&D it takes to build out a validator, reverse engineer down to the motherboards, to actual card readers, no one really does it. So, if you really wanted to do real hard R&D, where else will you go, right? The second is, on the product side as well, there is really not a lot of competition. So we see a lot of, and I'm talking the real high end of the market, we see a lot of talent wants to come in and work in a product business which is focused on building out IP. The really high-end work, Bhaskar's business around data center, for example, no one is doing the actual design and consulting work. So we become a good magnet for the quality of talent that we want. I don't think there is a massive amount of competition. Obviously, at a development resources level, there's been competition in India, but that's also come down quite a bit. We've been running centers in Vietnam, in Singapore. Very few firms do that. Like most firms would base their resources out of India and take it out. So almost no one is running an R&D setup in Istanbul, in Singapore, in Vietnam, in Malaysia. So, I think we've got a fairly diverse set of places where we are recruiting talent. We have a very unique proposition to that talent. There is not that many places they can go to get the quality of work. And just that video right up front that came in and you saw some of those, new sort of leaders who come in from some of these big MNC firms talking about why they came in. It just points to the fact that, you're talking really leaders who've been doing really well in really large global organizations who come in and believe in the story of what we're building out. And I think that really works at Subway.
Thank you for your last question, and thank you, gentlemen. Thank you for answering all those questions. Request you to please take a seat. Can we have a big round of applause for them? Yes. Also, I'm sure there will be some more questions at the email ID once again on the screen for you, so you can take a note. And now I'd like to hand over the mic to Mr. Ninad Kelkar, our Company Secretary and Legal Head, to deliver a vote of thanks.
Thank you, friends. On behalf of Aurionpro, I wish to thank all the 5 friends from investor community for participating in large numbers and making this a grand success. We appreciate your insightful questions and feedback, which will definitely help us in navigating the high-growth journey ahead. We assure you that Aurionpro remains dedicated to delivering exceptional value to all our stakeholders. I would also like to thank our executive team for their time and strategic vision. And thanks everyone who made this event possible, especially our marketing team, hotel staff, and our IR team. And thank you once again for your presence. Let's march forward together towards a future filled with prosperity. Looking forward to many more such engagements in future. Thank you once again.
Thank you so much, Ninad. And ladies and gentlemen, before we move on, just quick few announcements for all of you. If you haven't already, then we invite you to visit our experience zone, which is right behind you.